Hey guys, welcome to the Bitcoin.com weekly news recap for October 15th, 2021. My name is Michael Coombe, and on this week's show, we're looking at Coinbase launching NFT marketplace with social features. We're looking at the Bitcoin price rising as US takes lead mining position. And finally, we're looking at Snowden calling CBDCs cryptofascist currency. But before we get into all the juicy news, if this is your first time watching the weekly news recap, please make sure you're subscribed. Each week we do a deep dive into the latest and greatest crypto news. So if you are not subscribed, you're going to miss out on all the great content we have coming here at Bitcoin.com. Also, one small little favor, please smash the thumbs up button for the YouTube algorithm. It really helps us out. It takes a split second and it'll just help this show get discovered by as many people as we possibly can get it discovered by. So if you haven't done that already, just takes a split second. We're trying to spread the word on cryptocurrencies. So please smash that thumbs up button now. So let's jump into our first news piece here, and that is Coinbase launching its NFT marketplace with social features. So it was announced on Tuesday that Coinbase are launching Coinbase NFT, which is going to give users the ability to mint, purchase, showcase, and discover NFTs. And they said that it'll be easier than ever. So let's jump into the details here. So Nasdaq listed cryptocurrency exchange Coinbase announced on Tuesday its plan to launch Coinbase NFT. Coinbase's VP of Product, Sanchen Saxena, wrote in an announcement, "Today we're announcing Coinbase NFT, a peer-to-peer marketplace that will make minting, purchasing, showcasing, and discovering NFTs easier than ever." Coinbase further explained that they're going to be using the Ethereum ERC 721 and ERC 1155 standards, and that multi-chain support should arrive shortly after. The announcement notes that interested users may now register for early access. And another important note here, they did say if you've tried to create or purchase an NFT, you've probably found the user experience lacking. I would have to agree with them. As someone who's participated in minting and NFT drops, especially on Ethereum, the fees are prohibitive. And you can actually spend a whole bunch minting on gas fees and actually not get the NFT in the end. So it's kind of a scary proposition. You can spend thousands of dollars in Ethereum and ultimately end up without an NFT. So I think that has put some users off. However, the use cases, the NFT explosion has really happened this year. And obviously Coinbase are looking for their marketplace to compete with the number one marketplace, NFT marketplace, and that's OpenSea. So what do you guys think? Obviously, this is a huge development. Lots of crypto exchanges are dabbling and looking to explore this NFT marketplace idea with Binance, FTX, and others looking to do the same. So what do you guys think? As always, we love to hear your comments in the section below. So next up, we've got the Bitcoin price rising as US takes lead mining position. So the price of Bitcoin has been inching towards its all-time high, and at the time of filming, it's actually just surpassed 60,000 US dollars. So the United States are now taking the lead mining position after China's crypto crackdown, according to new data from Cambridge University. So alongside this, we've got JP Morgan CEO Jamie Dimon saying that he thinks Bitcoin is worthless. However, obviously, we all know that this doesn't seem to really correlate with what the entire world thinks, and particularly the crypto world. So in April, we hit this all-time high of $63,275 at the virtually held Institute of International Finance annual membership meeting on October 15th. Dimon said he personally thinks Bitcoin is worthless, but the JP Morgan's clients disagree, and so the investment bank, while not being able to custody the asset, can give them access, quote, as clean as possible. Dimon reportedly also questioned BTC's limited supply. Here you can see a tweet on screen. I'll just challenge the group to one other thing. How do you know it ends at 21 million? You all read the algorithms? You all believe that? I don't know. I've always been a skeptic of stuff like that. So the rising Bitcoin price drawing so much interest from Diamond's clients comes against the backdrop of Cambridge University's Bitcoin Electricity Consumption Index project, also known as CBECI, showing that, quote, the leading share of global Bitcoin network hash rate now sits in the US, followed by Kazakhstan and the Russian Federation. So the new data published on October 13th shows the United States share of global hash rate has grown from 16.8% in April and currently dominates 35.4% of the global total. Digital asset lead at the Cambridge Center for Alternative Finance, Michael Rauch, ties this shift back to China's ongoing crypto crackdown, which worsened significantly this year. So the immediate effect of a government-mandated ban on crypto mining in China was a 38% drop in global network hash rate in June 2021, which corresponds roughly to the China's share of hash rate before the clampdown, suggesting that Chinese miners ceased operations simultaneously. While the US share of hash rate has increased remarkably, the report also notes that the crackdown, quote, increased geographic distribution of hash rate across the world. So, it's arguable that this China clampdown actually led to greater decentralization of Bitcoin. It really hasn't shocked the kind of crypto and Bitcoin community. Obviously, you can see us nearing all-time highs of 63,275. And just as we've recorded this, it looks like the first Bitcoin ETF has been approved. I'm sure we'll have more details on that in the following week. So another reason to make sure you're subscribed. So what do you think about this? It looks like Bitcoin has really found its feet here. Post your thoughts in the comment section below. What is Bitcoin's price going to be by the end of 2021? We love to hear those predictions, so share them in the comments. Finally, we're looking at Snowden calling CBDCs a crypto-fascist currency. This kind of ties in. If you didn't watch last week's show, we did talk about Nigeria launching their own CBDC. And one of the drawbacks I did mention was that, it amplifies government control. And it looks like privacy activist and NSA whistleblower Edward Snowden agrees with me. And he's recently been launching a scathing attack on these central bank digital currencies. And he's called them a crypto-fascist currency. So in an editorial published October 9th, former NSA subcontractor and crypto advocate Edward Snowden expressed deep concerns about CBDCs, noting they are simply not the digital versions of fiat money that they are made out to be. And he calls them the newest danger cresting the public horizon. Some very, very strong words here. And he goes on to call CBDCs crypto-fascist currency and something like a, quote, perversion of a cryptocurrency. The privacy advocate hammers his point home, saying CBDCs are expressly designed to deny its users the basic ownership of their money and to install the state at the mediating center of every transaction. Some are concerned CBDCs could be used to usher in China-style social credit scores tied to money, as Tom Mutton, a Bank of England director, said of CBDCs in June. You could introduce programmability. There could be some socially beneficial outcomes from that, preventing activity which is seen to be socially harmful in some way. But at the same time, it could be a restriction on people's freedoms. A related economic concern for many is that CBDCs could be used to centrally force negative interest rates and knock out savings. As Bitcoin.com news reported, financial advisor Eddie Hobbs also recently published his own article about the global debt and interest rate suppression. While Hobbs isn't speaking expressly about CBDCs, he notes of the new global debt paradigm, quote, your savings are collateral damage in the new rules of the game. So CBDCs presenting themselves as this form of cryptocurrency, it is almost this illusion that governments are, jumping on board cryptocurrencies and say we're all for it, yet creating their own very opaque cryptocurrency that allows them control. Do you agree with Edward Snowden's very strong words about CBDCs? Are they just another version of fascist control? Are they a crypto-fascist currency? Very, very strong words. Or are they beneficial? Will they help the users of these countries and just help them have easier access to cryptocurrencies obviously trying to be balanced here with our arguments. So post your thoughts in the comment section below. We love to hear them. So no matter what a central bank or other financial institution decides to do, you can store your private cryptocurrencies in your own non-custodial private Bitcoin.com wallet. So you can store, send, receive your cryptocurrencies there. Don't forget the Bitcoin.com wallet now supports Wallet Connect, which means you can connect to decentralized applications so that you can earn interest on your crypto assets, trade using decentralized exchanges, participate in NFT drops and marketplaces, and so much more. Go ahead, grab your free wallet at wallet.bitcoin.com. So head over to those websites, grab your wallet. It's really fast, it's free, it's fantastic. Can't recommend it high enough. Okay, so that's all for this week, guys. We've got Coinbase launching their NFT marketplace. Wow, is this going to bring a lot of attention to the NFT world, even more so than that's already been happening. We've got Bitcoin's price soaring past 60,000. Jamie Dimon's obviously very negative comments. We've got this Bitcoin ETF approved. We're going to jump into that, fingers crossed, I think, in the next show. And finally, we've got Edward Snowden stating CBDCs are crypto-fascist currency. Do you agree? Do you disagree? Where is this fantastic world going? It's all so exciting. I will see you guys on the next episode. And as always, thank you so much for smashing that thumbs up button, and I'll see you soon.